Testing, late night review session. Okay, let's get into it. So, hopefully, that's not too loud. I think that's good. Anyways, so let's get into it. Didn't necessarily have, maybe I'll turn it down just a tiny bit. Didn't necessarily have a plan going into today's review session. Haven't reviewed in around 2 days. Where is Notion? Oh my goodness. There it is. So I haven't reviewed in around 2 days. However, where we last left off was understanding the the breakdown of timing within our mechanical trading model, and where to start looking to review. Trying to bring up whether or not I still have it on my chart. Oh yeah, there you go. Okay. Actually, no, I don't have the text. It's just trade recap. Okay. Anyways, we broke down where to start looking in order to properly filter out our trade ideas. Timing. I do need to put in these. I guess I could do that. Not now, but I'll do it after this. I guess whatever. But where I want to start looking in order to begin to refine our model and filter out, or begin to start steering ourselves in the proper direction in order to filter trades out, is at our SMTs. Now, how are we going to do this? We're going to utilize both SMT and internal liquidity. Since we utilize both, however, we need to really take a look at the higher time frames, because that's where we mainly get our trade ideas when we look to see a reversal off of internal liquidity. I wrote this trade idea on Friday as I guess LA is burning down, but I flagged this trade as review on Friday because this trade idea was higher probability. However, it was off of internal liquidity. So, okay, now I got the plan. Here you go, my little minions. I got the idea now. See, it just takes me a minute. I have to talk for a minute, then I figure out the plan on what we're going to do for the day or for the session. Zoom in here real quick. Oh, bruh, it's literally still here. Let's make this smaller right there, put that in the corner. So this is what we're going to do. I got it. We are going to look at two types of SMTs I utilize. I'm just gonna write two types of SMTs. So the first one being internal liquidity. So reversal off of internal. Second one is higher time frame liquidity. This refers to anything on the 15-minute and above. What's the arrow and above, like this? Yeah, 15-minute and above. Did I write it right? Anyway, I think the arrow is supposed to be like at the end. But anyways, 15-minute and above. So we're going to look at these two types of liquidity first, and however, we're going to start off by looking at higher time frame, because internal liquidity I want to take a little bit more time with, but I need to first be able to fully and clearly analyze, or start to get a picture of what actually makes a probable SMT. Oh, there you go. That's the question we need to answer. So the question we need to answer today is, what makes a probable SMT? This is the question of the day. We're going to spend 40 minutes answering this question. Regardless, if we end up sitting here for 40 minutes, not moving on a different screen, just thinking about what makes a probable SMT, that to me is a day accomplished. My only goal today, in this session, Now, does it have to happen in this session? No, but I really want it to happen in this session because it'll, catapult us moving forward. And tomorrow's session on Sunday, before Monday, going into New York or whatever, will be amazing. And I'm probably gonna make like a regular video tomorrow, maybe, about like, just for documenting the journey. Just, I'm gonna, over the next month, I'm gonna be reviewing blah blah blah, whatever. But anyways, so the question is, what makes a probable SMT? Our goal this session is to properly identify this, so we can begin to have proper context on how and what to filter out. That's most important, because we need to see. I don't think I need to add any more confluences. I really don't think I'm at that point. And if I do, I'd have to back test it. I'm not trying to do that. However, if I have to, I have to, right? But let's just start off at looking at high probable trades. So we're going to go to the table right here, and we're going to filter out. This is live for you guys on how I do my filtering with my model based upon my journal. My journal's super easy, but we are going to go to, where is it? There should be a, why is this so here? It should be like, so mushed in the middle. Where's the rest of it? Why does it extend so far out, and why can't I, like, this is, oh, there you go. I was looking for this. Okay, here you go. Here you go. That was little in the middle, right? Kind of right there. Okay, dates don't matter. So execution grade and probability we need to filter out from. I first want to look at the highest probability setups. So we're going to filter, and we're only going to look at high probability and start by analyzing all of these trades. So out of all the high probability trades, let's see. We have, this is the entire journal we have so far. We have 4 break evens, 2 losses. I want to first start off by reviewing each and every one of these high probability trades, seeing the commonalities between them. If we could start to see the commonalities between them and relate, it may start to give us an idea of what we're doing right and what we're doing wrong when we go in and compare the low probability trades. But for anyone curious, this is how many high probability trades, or that are flagged at least, executed upon. And let's see the low probability. It's going to be brutal, I'm just saying. Oh. It's actually not that bad. Then what's causing all my losses is the question. Mid probability setups. Okay. The mid probability setups and the low probability setups combined is causing all my losses. Out of how many mid probability setups do I have? 1, 2, 3, 4 wins out of however many this is. What's the count? It should show it, but whatever. I guess it doesn't. 18. 4 wins out of 18. That is a horrible win rate. Okay, I don't know how to do the math on it. How do you do? Bro, I know how to do the math on it. My brain's just slow. Anyways, start off by looking at the high probability setups. We'll go one by one, from high probability, mid probability, low probability. But first, I want to look at the trade status before we go into any of, each trade. I want to just map out our win rate on, or at least, how consistently we've been performing. We'll count most of these break-even trades. I didn't mean to do that, but most of these break-even trade ideas as trades that could have been potential wins, mainly because oftentimes I'm pretty sure at least there were trades that were in profit. However, I chose to break my rule rather than follow them, and that led to me not taking profit. Okay, yeah, this is break-even. Just had to double check. Yep, this was a trade idea right here. Yeah, we'll just count them as just for this. But obviously when we look through a holy yap. Okay. So we have a total of 15 high probability setups we've executed upon, which honestly isn't that bad. That's actually pretty good. But now let's see out of how many of those 15 were actually wins. We had 1, 2, 3. oh my goodness, that is brutal. But that's fine, because that's why we're doing this. That's why we're taking the time to review, so we can have a lot more. So we have 3 actual wins, and we have 1, 2, 3, 4 break evens. So if we want to combine those, just for the sake of it, we'll call it 7 wins. 1, 2, 3, 4, 5. 5 losses, not bad. Invalid, and these are 2 winning trades that we missed. So we have, if we wanted to count those, we have 9 wins. Let's just count 9 trade ideas that were high probability that continue to draw liquidity. 9 wins and 5 losses, which is okay. It's not good. It's definitely not good, and it's not where I want to be. But it's not terrible. It's not a terrible start. I'm looking at this because it says not valid, meaning I missed it. Yeah, okay, I remember this. That was off of internal liquidity. It's gonna be a long year. Guys know that Homelander image? Sorry, I'm not gonna get off track. But yeah, so let's start off by looking at each one of these trade ideas, and then really diving into what caused these break-even trades to be break-even trades. Holy moly. Let's start off from the very first one. So this was Friday. When analyzing this was off of internal liquidity. So internal liquidity taken, probability was flagged as mid or high probability. The reason why I flagged as mid probability rather than solely just high probability was due to this not being off of higher time frame. What I already know is typically off of higher time frame. Obviously, that is a stronger confluence for reversal. However, another thing is, I know too, in order to actually take a valid trade idea, I need to have internal liquidity, low-hanging fruit I'm actually looking to target, rather than just targeting the void. But regardless, if we still go look on the hourly, let's see what we can see on this. So when initially opening the chart, we see range highs and lows. We understand that, hey, we have liquidity we could potentially look to take out our SMT off of going into the trading day. So that automatically typically sets it as a mid probability day. Why? I found it because it means we may have the potential to validate a trade idea, because all I need is a high or a low in order to validate a trade idea off of. We had prior SMT during Asia session, or London session. A little bit of Asia, a little bit of London. However, nothing that would go affect us going into New York. This range is the main range I'm looking at. I don't see anything in specific. Like I said, we did an SMT off of those highs. Let's look at second trade. Thing is, for me, I struggle with understanding how to, like, besides stacking confluences, what specifically makes like this SMT higher probability than this SMT. Like, why was the timing of this SMT proper compared to why I got stopped out to the prior trade idea? But if I'm thinking like that, if the SMT still happened and I executed and got stopped out, but the SMT continued to hold later, that wouldn't necessarily mean that the SMT was invalid. That would just mean my entry was invalid. But I was going to say, if my entry criteria isn't not clear enough, I was going to say like niche enough, not niche enough, like where it just doesn't always form no matter what, then it adds a sense of filtering to it. So when it does showcase, that's when I know when to execute, putting myself in the highest probability, which I already do. But my lower probability executions are causing me to have proper timings with the right SMTs, just the incorrect timings of it. So I'm trying to think on whether or not it's the SMTs I need to look into or the entries, but let me stop overthinking. Go on the higher time frame. This was off of higher time frame liquidity, so this So we already have one thing. We know for certain one SMTs off of higher time frame liquidity are higher prob. Cool. So off of all-time high. However, I ended up losing this trade, but the SMT itself was still high probability. I'm just trying to think. I'm like, because I know I'm going to get it. If I don't get it today, I'll get it eventually, and that light bulb will click, and I'll be like, oh, okay. And I'll probably be like, bro, how did I not see that? SMT off higher time frame. Now, obviously, doesn't mean every higher time frame. You know, SMT off of higher time frame is gonna win. That's not what I'm saying. You know, just after all, just putting yourself in the highest probability in order to. Oh my goodness, I can't, bro. I'm literally getting molested right now, dude. How do I? Why is the arrow going away? Let me pause this real quick and fix it. Oh my goodness, that took me like an entire minute just to figure that. I'm not trying to do it again. Anyways, to you to look at these trade ideas. Oh my goodness, of course I don't put. I put high probability. I don't put the rest of the images. Okay. Actually, sorry, that initial statistic is right, but this is a mistake I made on my own, which this isn't a model mistake. That's why it's flagged for review. I got it now. So this should actually be a win. Thing is, with my high probability trades, the RR carries so much. So, I mean, talk about another time. But this is off of all-time high. So up to all-time high, we already understand that. Also took out internal liquidity. Cool, that makes it a higher probability. But then what's the difference between higher probability internal versus a lower probability internal? That's the real question. Because when you know what's higher probability based upon higher time frame, and range highs and lows, that's easy. But what about internal liquidity? We end up forming during the session SMT off of like Friday or like certain trades I missed. That's what I'm really trying to figure out. But then I'm thinking if and when I look at the low probability trades, I may see something off of the SMT. But then a question just occurred to me. Out of how many trades that I've taken, has the SMT actually been low probability? Has it been the SMT that's low probability, or the entry trying to time that SMT improperly? Because the SMT is the confluence for when we could start to look for a reversal. The entry is when we think we're going to start beginning to validate the reversal. So that's obviously when we take the trade idea. Now that I think about it, I got it. Yeah, we're going to look at all of our low probability trades. We're not going to look at it like this. We're going to look at it going from this gallery view, because I want to see whether or not on the first trade idea, whether or not that SMT continued to hold or whether or not it got invalidated. I want to see out of how many. We're going to look the whole journal, or try to in this. If we don't do it in this whole thing, we're going to push it tomorrow. But we're going to look at every single trade idea. I want to see exactly out of how many trades was. Sorry, the camera maybe blurry. Okay. out of how many trades was my SMT actually invalidated compared to whether or not my timing, my entry timing, was improper. That's what we're going to do. I'm going to type that out real quick. Instead, we are going... I know I spelled instead wrong. Instead, we are going to look at all trades and see how many times our SMTs were invalidated compared to our entry timing. There you go. That's huge. Okay, because if we do it and we find out, hey, actually our SMTs do continue to hold and it's just our entry, then we could just double down on looking at our entry, and we don't need to look at our SMTs because we already know our SMTs 95% of the time are high probability. That rules out more guesswork we would have to do. We'll still skim through it. Obviously, like I said, we're looking to review everything, but it'll showcase us where the actual disease is. Okay, so we have this first initial loss and this first initial win. I already actually know this because this was yesterday. This SMT timing continued to hold. Only difference is we just continued a tiny bit higher, but we continue to hold the SMT. If we go when I executed the first low probability idea, right here we SMT'd. However, these highs continue to hold throughout the day. We continue to hold this SMT later. So we have one. I'm going to put the chart up here, and I'm just going to type, how should we do this? How should we tally it? Should we just like tally it? Do it like this. You guys can't even see, can you even see that? We have this and this. SMTs held, SMTs failed to hold. There you go. We have one. This cannot be that thick. Okay. I'll just tally it for every single time. I'm gonna have it on my second monitor. So that continue to hold. Let's look at this trade idea. We didn't execute upon this trade idea, so don't want to count that. Watched only, executed upon loss. Okay, cool. This trade idea as a whole didn't hold, but that was because of bias. So I'll put a section here. I'll add one more. Failed to hold due to incorrect bias, because I don't want to confuse them. If my bias is right and they just failed to hold, then that's totally different. But if my actual trade idea is wrong, then, you know, I'm not going to classify that as low probability SMT because I was trading against trend anyways. So we have one, and all these three count, so I'm just going to count these in as a conglomerate. I have your wicking, auto displacement. Let's look at this one. High probability review. This SMT continue to hold, even though I did get stopped out on it. So we'll put another check mark. We got 2. Friday, I got trolled out of, but the SMT continue to hold, so I'll flag it as 3. Here says a first initial loss, but I didn't lose. I don't know why that's there. Okay, this trade idea. When I want to see, was there any other trade on this same day, Thursday? Nope, there wasn't. Trade idea continues to hold, and I'm including high, trades that also played out and didn't, days I didn't take multiple trades, because I want to see out of how many total trades do I have, do my SMTs actually play out? I have to see that. This is something I need to see. This right here, Wednesday, okay. Let's look at the higher time frame. This one, I don't think played out. However, I did have the improper bias, but we'll just put it as failed to hold. This one, I'm not going to put it as incorrect bias, just failed to hold. September. This was incorrect bias. We were not bullish. We ended up continuing lower later, like that. And for that entire day, we didn't continue higher. So that was failed to hold due to incorrect bias. However, I'm not just trying to not put any in SMT failed to hold. I want that data to be genuine, obviously, because if you lie to yourself about your data, you're only screwing yourself up in the end. Because that's your data, something you're going to reflect upon for confidence when executing. Watched only, executed upon loss. Let's see here. So missed this first initial short, so this SMT did hold. However, this one, I don't even know why I traded this. We didn't even SMT, I don't think. Let's get the higher time frame. Okay, we did SMT, but it was a very low probability SMT. I'll put this both in SMT's failed to hold and incorrect bias, and then one for SMT held. Why, you guys may ask me, because I was looking to take this long to the upside, this continue to hold for the rest of the trading day. That was the initial SMT I was looking to reverse off of Friday, which is right here. Not taken, low probability. Oh, I didn't take the trade. Just on loss. We later continued lower from here, so this just failed to hold. So 3. I was also looking to target higher. I'm not going to put this in SMT's held because I wasn't looking to take that trade. Or when I did, it was so last second. Only took one trade idea on this. This failed to hold, so that's 4. I remember because Y price actually continued back to the upside. This, I could actually put SMT's held. I got stopped out on this garbage move right here. However, we still continue to validate this SMT, which I executed long off of again if I go back. So that was right here and here. Longed here, loss, then longed again. Okay. So that SMT did continue to hold. That's a perfect example of what I'm talking about, because if that example was an entry that was actually flawed rather than the SMT, because we just continue to hold the proper SMT. So if I could have filtered out that entry, then that entry would have never even been taken. Wednesday, only one trade for this Wednesday. So SMT failed to hold. However, my direction was incorrect. My direction was incorrect. Tuesday, let's go to Monday, break even. SMT held right down here. September 1st, 29th. SMTs failed to hold. For your guys' sake, I'm gonna pause the recording, and then I'll come back once I've done most of them, at least. Once I've done all of them, fine. Okay, after reviewing everything, I realized something between my SMTs failing to hold and my SMTs failing to hold due to the incorrect bias is that they're literally 100% correlated. Whenever my SMT fails to hold, it's because my bias is incorrect, and vice versa. So the reasoning behind my SMTs failing oftentimes isn't necessarily, oh, I'm entering too early. It's just my entire trade idea as a whole is just not valid. My drawn liquidity is wrong, whatever the case is. And that happened, we could see 10 and then 13 times, so. But see, that's right now. If we could learn to filter this down, then our win rate will exponentially increase, or substantially, sorry. But how many times our SMTs hold, even counting the days that were losing days. And I just may have not gotten a re-entry or whatever the case is. 10, 15, 20, 24 times. Now, on my own personal time, I will go in and fully review everything, just on my own, so it's not like the video's not 30 hours long. But this is how it's looking right now. So 24 times I was correct about market direction based upon the SMTs I was looking to reverse off of, and 13 times I was incorrect. If we do the math, I'm not trying to do the math. Let's do the math. Let's just call it like 50%, bruh. It's a tiny bit. It's like 53%. Let's get the calculator. Okay, wait. How do you do it? 20. So that's just chat GPT, bro. I'm not doing all this. Like, be so for real. I forgot if it's multiple. Really, TikTok? I forgot if it's multiplier divide. Out of however many trades I looked at, I had 24 trades that held SMT and 13 trades that didn't. What's that, like, win rate ratio or statistic? Wait a minute. I don't know why bro's thinking for so long. I could have done the math by now. 64.9, we'll just call it 65% of my trades had proper trade direction. That's pretty freaking good, I'm not gonna lie. That's actually really good. That's actually pretty good. Now, you know, the reason why I'm saying good right now is because this is a great base. You're telling me I'm taking garbage trades and this is my base? 65? Like, I know it seems like really, like, what are you freaking out about? Like, it's only 60, bro. 65, it's like realizing you actually have a low HTN base, a low high turn normie base, rather than like a low MTN base. It's a lot higher than you expect. So you actually have like genuine potential to reach Chad Light, rather than thinking, oh, you'd only become high turn normie. Sorry, black pill brain rot. But yeah, that's amazing. Meaning our potential to increase this number right here, we could probably get this to maybe 80%. Actually, let's talk with ChatGPT right now. I'm gonna literally show you guys how I use ChatGPT. Okay, so I'm making a video right now, but after reviewing my trades that I executed upon, that was a statistic I found out. I actually realized by me seeing that, I thought it would have been significantly worse. I found a direct correlation between the SMTs that failed to hold were 99.9% of the time due to me having an incorrect bias, Now I'll look into the tendencies that actually had me execute upon those trades so I could learn to not take those. But what's actually surprising me right now, at least for the most part, is that 65% statistic right now while having inconsistent execution. Because I'm thinking that if I were to have, let's say, even cleaned up 50% of my low probability trades that I've taken that counted toward the SMTs failing to hold, that 65% could potentially increase to even 70 or 75%, maybe even 80%, putting me in even higher probability to take higher probability trades, because most of the trades that were taken off of, a proper SMT, one that had proper drawn liquidity toward internal, often played out, or of course was in higher probability of playing out compared to the ones that failed to hold. When I mean this is how I talk to ChatGPT, this is literally how I talk to ChatGPT. I'm doing this. You guys can get an example of okay, this actually big insight. You're underestimating how powerful it is. That 65% baseline is already solid. Like I said, low high tier normie. You got that while mixing low probability trades and inconsistent execution and wrong bias calls. There you go. That means the raw framework itself, SMTs aligned with their model, is holding ground. That's proof of your edge is real, that your edge is real, and the noise is coming from your execution and bias drift, not from the setup being weak. The correlation with bias and errors is gold. The fact that you notice 99% of SMT failures tied back to incorrect bias tells you where the leak is. It is not SMTs being unreliable, it's you putting them in the wrong context. If you filter correct bias first, then SMT becomes an automatic green light. That's leverage. 3. Small execution, clean up compounds fast. Let's take your thought into experiment. Current 65% SMT hit rate. Clean up half of your bad / low probability trades, which is literally our goal with this. Genuinely, our goal by the end of all these reviewing sessions 2 months from now is to have cleaned up at least 80% of them. 80% is the goal, which I think in 2 months of reviewing every single day, almost every single day, you can do. We're already on the right track. But as I was saying, that alone, probability trades, that alone pushes your edge towards 70 to 75%. Now, that's not win rate. This isn't win rate. This is just increasing the probability of my executions, which will in turn increase my win rate. Adding stricter discipline, not forcing continuation when it's not there, is potentially 75 to 80, which isn't crazy at all. And now, obviously, I don't just take everything the AI says into consideration. You have to have your own thoughts too, It likes to agree with what you say, but it's definitely a plausible statistic, even if we do the math here. At that level, you're not just profitable, you're stacking consistency. What does this mean for your system? Bias filter equals number one priority. Before executing on SMT, you should be able to clearly articulate why is the drawn liquidity and why is this a drawn liquidity and why is this bias valid? Bro, AI is so good if you could just use it properly or simply or given enough information, like this simple thing right here. So we know bias filter should be our number one priority. We may have not answered, actually, I think we did answer our question we wanted to ask, because we realized bias filtering is what determines the probability of our SMTs holding, and of course our trade ideas as a whole. But this should be our number one priority. There you go. Okay, I took a second to think because I figured I need to turn the fan on. It's getting hot. I took a second to think because this is what I was thinking about. I need to do in my own time, but need to go in and flag each and every one of these trades on whether or not the SMT held or failed to hold due to having the incorrect bias. I need to flag every single one of these trades. Reason being, I want to see out of those 24 trades that the SMT held, not only how many winning opportunities there were, but how many of those were winning trades. I want to see my win rate within the SMTs held. And here's my thinking. If I can see the win rate within the SMTs held, I can, put those aside and look at all of the trades that were losing trades, and then I could begin to analyze why they were losing trades, although the SMTs held. Were they losing trades because of, entry, which I'm most likely, it may be my entry. I think that may be one of the criteria I need to refine. Like, I'm really thinking, because it's like, if we take the liquidity, we're still SMTing off of that same liquidity if the SMT held. So the only thing that would have allowed a lower probability entry before the actual proper move that I took later in any example would have been a lower probability entry. But then the future question is, how do we properly filter that out? Dang, I should have been recording that out loud and said it to ChatGPT. Let me pause here. I'm going to tell ChatGPT that real quick. Let's see what he says. So yeah, what I genuinely think right now is something about my entry. Because the more I say it out loud, the more I kind of put it together. Because when we look to SMT, look for the ones that held, we're still holding that same liquidity. We're still holding the same draw we look to SMT off of, so it's definitely not liquidity, and it's definitely not the SMT itself, if it's still continuing to hold. Now, I'm not counting these where my bias was incorrect, but if I executed prematurely to the proper move, then that would only mean my entry would be causing leaks, meaning I'm executing on low probability entries, not trade ideas, but entries before the proper move, causing initial losses that compound that really don't need to be there. Because how it should be is 24 wins, 13 losses. Like, let's be real, it shouldn't be 3 wins within these 24 and 50 losses. Like, what? Sorry, I need to fix the camera. But yeah, because this statistic, let me also say this with ChatGPT on. Yeah, because this statistic should, it really should be 24 wins and 13 losses if I understood where price action was going and the SMT continued to hold. There should be no reason why there's 5 wins when the SMT continued to hold 24 times. Be so for real. Oh my goodness, this camera needs to focus. But yeah, but if the entry is a leakage, then I can not only just fix these, but I can fix maybe half of these too, or maybe a lot more of the ones that failed to hold. But that would also be due to incorrect bias. But that's where we look into liquidity. So there you go. I think that's solid for today. I think this is really good for today, actually. It seemed stupid simple, I know, but I think this was a huge breakthrough in understanding our current statistics, because we now actually genuinely have a baseline and we know where to look, rather than just look at each trade and not knowing what to look at. Now we've started to separate certain things. I need a whole different template. The next video, or hopefully the next video, maybe the video after review after that, I'll have a whole data sheet, just not something crazy, but just the numbers aligned of our baseline right now, and how I properly separate everything so we have clarity on it, because this is our overall, right? This is our overall. Cool. This is where we need to look to refine. Not yet these. These combined can get fixed by liquidity. So, obviously, bias. That's how we'll fix these two. I'm not worried about these two. I'm worried about these. So what we're going to do, I'm going to tell you guys the plan before we even do it. Not this session, but we're going to separate the winning trades, put them to the side, look at all the other trades within that were losing trades, and see why they were losing trades. I'm saying it right now, I think it may be because of premature entry. Or, personal mistakes, me not taking profits, whatever, early scaling in when I was first refining, whatever the case is. I think these are both psychological mistakes and technical mistakes based upon low probability entries. Not trade ideas, entries. That's my conclusion for now. That's what I think. But yeah, this was today's session. Hope you guys enjoyed. I think we made a huge breakthrough just simply understanding our data. I'm not quite sure what I'm going to title it, but yeah. Thanks for watching, guys, and I will see you in the next one. Peace.